Mm, yeah. Mm. I would hope not. Uh, I mean, if the market's gonna be regular now, I mean that's fine. Mm, I like it. Gold always knows when to make you look like a fool. That way you don't know what the heck you're talking about. And like that shit bounce, bro. That's fucking crazy. And make sure that a lot of this is cleaned off. Honestly, I don't even want like big moves like that. Banned. Uh-huh. Oh shit. Yeah. Yeah. How the fuck did I miss that? Alright, so what the hell was I looking for? Probably was looking at yo, what the hell was I looking at there? And that was obviously wrong. What the hell was I looking at? Hey, yo, what's up, everybody? And yo, I appreciate that, Cave Trader, and happy Father's Day to you as well. Happy. Well, actually, I'm not a. I'm making the assumption. Are you a father? And if you are, happy Father's Day, and happy Father's Day to all the fathers out there. You know, I was looking through my email thinking that where's all these prop firms at, man? What these Father Day specials at? Where they at? I don't know if they made one for. I know they made one for Valentine's Day, but where the Father's Day specials at? Where they at? But okay, no. Yeah, I was actually putting in this CFTC data, and this week, I wouldn't short this week. The data is showing that we're 60% long this week. The institutions are 60% long this week. They're 60% long. So we could see, I mean, we're 60% long. And honestly, I have to update this. I'm gonna have to fill in this information as well because I did miss a couple of weeks. Because usually when they have a holiday, they take their time bringing the data up or making it available. And so usually when they do that, I kind of fall off on it because they usually don't keep up with it after a holiday, and then all of a sudden all the data is available. But yeah, we got 60% long this week, 40% short. That doesn't mean that we won't see big short opportunities, but the overall trend will be bullish. So just be mindful of that. The commercials, they're 55% long, or they're 55% short and 45% long. And because these are commercials, they're hedging against their delivered products. So longs mean short and shorts mean long. And they're more hedged short. So that means that they expect the market to also go long. So just be mindful of that. Trade long, don't trade short this week. But I had a very interesting weekend. I read a book, one of the Market Wizard books for. I read one of the Market Wizard books, and man, I'm surprised I haven't read none of his books or none of the books in that series. Hold on, for whatever reason. That's a weird request. Anyway, so I was listening to the book. I don't know if all the Market Wizard books are in this interview style. Maybe they are, but the one that I specifically read, and this will be the only one that I read, is it might be on my other phone. It might not even be on this phone. And I'm not going to download Audible on this phone. Yeah, I don't have it. Maybe I can kind of just maybe I can look for it online. Yeah, let's look for it. I'm pretty sure I can just put in like Market Wizards or something like that. All right, so yeah, so this is the one I actually read or listened to this weekend. It's the hedge funds Market Wizard: How Winning Traders Win. This was actually a very mind-opening book. Listening to how other traders win in the market and what strategies they use to win, and the perspectives from these traders were very eye-opening. Just imagine these guys were talking about how the Nasdaq being over 5,000 was crazy. They were talking about how Warren Buffett's, I forgot what company he has, how the shares of his company or that company was at $900. It started off at 12, and they were hesitating to buy that $900 when that shit is like at what? Berkshire Hathaway is like at like what? I don't know. Let me see. I don't even know how to spell it, but I'm pretty sure I'll get close. Yeah, Berkshire Hathaway stock price And I know it has like a class. Yeah, it's like almost like 700K a share. 700K a share. And I know there's like an A and B class. And they were talking about hesitating to buy it at $900. Man, it's it was definitely mind blowing in a time machine, a blast to the past, because these guys and their concerns, it's just one of those things where it's a never ending cycle. We say, oh my God, 20K is too high, 20K is too high, 22K is too high. And these same guys throwing around millions and billions of dollars in the market was talking about 4,000, 5,000 was too high on the Nasdaq. They were talking about 1,500 when gold was trading at 1,500, saying that was too high. Like, man, the market. So it was definitely mind opening. And I had to ask myself a question this weekend. That question was, when there was a trader that trades very similar to that trades very similar to how I trade. And I kind of heard myself speaking through this trader, and it really opened up a question that I had to really sit and think on. I had to ask myself, well, why do you counter the trend at times? Well, obviously, it's a habit from trading the Nasdaq. If you trade the Nasdaq, you know that the Nasdaq can randomly bounce outside of the trend and then continue it. So it was definitely a habit that I picked up over time just trading the Nasdaq. But he said something that I can just relate to. He said, I'm just comfortable with it. And that's absolutely right. I'm very comfortable with trading against what the rest of the market is doing. I'm very comfortable in it, and I'm very successful in it. However, I will also acknowledge that if I just trade with the trend, I can make way more money. Way more money. But I'm just very comfortable trading against what everybody else is doing. And then I had a follow-up question that I asked myself. Well, why do you do that? And my inner gambler says, because it's fun. And then I hit myself with, oh, so it's fun losing money? And then when that response echoed into my head, and I had to really sit and think like, oh shit, is losing fun? No, it's not. Losing is not fun. The I guess the adrenaline of countering the trend and hoping that you caught the top, or hoping that I caught the top, releases the adrenaline and makes it feel like gambling. And I enjoy the feeling of gambling, but I do not enjoy the feeling of losing. And so, as I said earlier in last week's stream on Friday, that I was going to come up with a trade policy for this week. And I have. I know what trade that I want to trade. It's very similar to Santiago's. It's the one trade that I've been making money on, that money trade, that pullback trade. But here's what I won't be doing anymore. I won't be trading against the trend, the overall trend. If I trade against the trend, I'm going to need a confirmation that the trend has changed. And that's going to definitely be a challenge for me to overcome, because it's not something that I logically do. It's automatically an autonomous function. If I see the market going in one direction, my initial impulse is to short that damn thing if it's going higher. I'm going to short it. It's something that I don't think about. It's already a habit. However, I almost made that mistake with gold tonight, and I almost lost the account because of it. And that kind of solidified to me that, you know what? Uh, Trading these small little pullbacks versus getting these easier moves like this right here, this pullback trade right here. This is what I'm absolutely looking for. This is actually what I'm looking for. Is these moves in one direction, these strong moves in one direction, and then that pullback. And this is an area where I would want to buy. But obviously, I was in short. I was able to catch this move short, the strong move in one direction, and that pullback, and I was able to get in short. Now, I made a mistake. I kind of got too heavy too early. And if this thing decided to spike up and then go down, that account would have been gone, or it would have been close to being gone. I got too heavy around, so I saw this break, and then I got too heavy like around this area right here, and the market went up against me, and then it finally rolled over. Now, it did come back, and this time around, when it did came back, I kind of just waited and was able to catch at least this move down. I made $4,000 in the Apex account, and this is kind of why I kind of want to solidify this trade policy. Why I want to wait for the confirmation, because on gold, I don't have to experience FOMO, because gold literally gives you plenty of opportunities to get into the move. She literally does. She doesn't do the things that the Nasdaq do, and I had to come to accept that. I struggled to make $4,000 in this move in my Apex account. Obviously, I had to stop trading my Apex account, because if I lose that $4,000 and $3,000 more, if I just lose one trade, if I lose all this money plus $3,000, I hit daily loss limit, so I had to stop. So I had to go and continue to trade in the sim. Right now, this position is up $9,000 or $8,500. I struggled to make $4,000 instead of waiting for the easier trade, and this trade right here is up $8,500. So I'm up $8,500 in this sim. $12,000 up on the day. And if I just waited for the money trade, for that pullback back into an area of resistance, this trade right here was the money trade. This trade right here was a money trade too, because like I said, this did fit the model. It was the pullback trade that I would normally look for, but I didn't wait for the full pullback. I didn't want to miss the move, so I thought that they was going to test this area right here, this little range right here where they broke structure earlier, and that's where I got short. So these little hiccups will just solidify my transition into just waiting for my trade model and only taking those types of trades, because these are the trades that are going to make money for the account. And I do want to show something else. That trend line, I'm gonna turn this off. So that trend line from last week, look how the market is still respecting the trend line. That trend line is from last week, And this is where once we got that I guess that stop run, look at, I mean, it stopped perfectly at this trend line. Perfectly. Perfect rejection from the trend line. And we saw a move right back down. And I want to show something else. This trend line right here is on this higher time frame chart that I'm using. Look at how the bulls made several attempts to get above this trend line right here. They tried once, they tried twice, they tried a third time to get to hold above this support trend line right here. You can see that they tried once, but they failed to hold the pullback. They tried twice, they failed to hold the pullback, and they tried two more times. This time you can see that they failed and we're getting a breakdown. And it looks like they're trying to make another attempt to get back above that trend line. If we can get above this trend line on gold and they actually hold the pullback this time, we can see a big move higher. We can definitely see a big move higher on gold here. And all-time highs is not too far off. It's right there at 35.38. And like I said, in that Marcus Wizard books, they was talking about gold being at 1,500, and that, oh man, that would be crazy, and that's double that now. So 7.6. So apparently we got a double top here. So what is that? May 7th. And then we got a double top right there. So it rejected at 76. Okay, so we got a rejection from here. So I mean, shit, the next stop is all-time highs. Probably 94, 497, maybe 3,500. Maybe that's what we see. Who knows? But yeah, gold is making its way right back up. And look at how it's respecting this trend line. Look how after the bulls failed to hold this trend line right here, look at the stop run underneath that trend line. Look at them using it, failing to hold, and this right here is a money trade too. This is another trade that I look for. I look for price to break out and pull back. That's the trade that I like to take. A second follow-up trade that I like to also take is situations where we have the buyers or the sellers failing, and I can sell or buy into their stops. Right here would have been a nice area to sell into sellers stop, into buyer stops, to get their stops to fuel this market down. Beautiful buyer failure setup. And we got that move down. And that's another trade model that I will be looking for. And those are the trades that I'm only going to take. So like I said, it'll be challenging, but I will overcome it. And moving forward, those are the trades that I'll be looking for. Now, we may have another opportunity right here for another buyer failure right here. This could be a potential area where we see the buyers fail to push price higher. And if we can kind of get a price to break and kind of do something like that, that's something that I kind of expect for the market to do here, is for the buyers to fail here. But if they can hold it, and this is actually a great risk to reward trade right here, honestly. Actually, let me turn this back on, because I was actually looking for this actually. So I'll wait. I'll wait, because I want that confirmation. I want that strong close, because there is that fair value gap right there. So I kind of want to Kind of want to wait for that strong close, that break, the buyers to fail, and I can sell into their stops. I'll just keep that right there. Cave Trader says, "What's my favorite thing from the book?" Oh, well, I kind of already talked about it, but just a different perspectives. Um, it's like it's honestly, if you're familiar with the Interview with the Devil, I think that's what that book is called. The Interview with the Devil, or Interview with the Devil, I think it's called. Yeah, the interview. No, that's not it. Um, damn, what's that book called? Um, Everything in that book has happened. Outwitting the Devil. There it is, by Napoleon Hill. Outwitting the Devil. It reads very similar to that interview style book. Interviews. Okay, I was about to say, did it slip my order? Great. All right, so let's. This is another trade model that I'm looking for. I'm looking for the buyers to fail. And this is a good risk to reward trade because I can put my stop literally above this high right here. Great risk to reward trade. And we're going to have the buyers fail right back down into this trend line. And that's what I'm looking for. My only concern with this trade is potentially we could see a bounce at the 200 EMA and we could see a bounce at this value area low. We could possibly see bounces here. But if we can kind of clear that, then that trend line looks like a great objective for the bears. A great objective. So let's see what happens. You know, I don't trust fair value gaps on gold. I want to be aware that they're there. And I'm not going to sit here and say that sometimes gold doesn't use these fair value gaps, but I just don't trust them. Structure, price action, and structure will always trump fair value gaps, but no disrespect to fair value gaps or traders that look for these gaps. I just don't trust them. I think in my opinion, I feel that fair value gaps are great for scalps, but with the way that I trade, fair value gaps won't be. It's not an influential part of my trade. It's not. It definitely won't be. I'm looking for EMA bounces at the 200 EMA. I'm looking for bounces or rejections at the value area high or low. I focus more on structure, and I want to trade into stops. I want to trade into stops. That's what I'm looking for. Yeah. And I feel like there's nothing wrong with the ICT traders. There's nothing wrong with them. So I think they're very good. ICT is good. Well, no, I kind of want to use my words correctly here, because I mean these are not concepts that he like I said that he came up with, but The concepts that he teaches, I think that's a very accurate statement. The concept that he teaches, I feel that it aligns more with shorter time traders, but I don't know. I wouldn't swing a fair value gap trade. And honestly, with gold, uh, this will be like a second follow-up trade, and there goes that stop run. There we go, baby. There we go. So, like I said, my only concern with this trade would be a bounce at this value area low. Gold kind of trades in a specific way, and I just come to accept that that's how gold trades. This is how gold trades. It's a commodity, so it's not as liquid as the indices. So it has to trade a specific way in order to generate liquidity so it can move level to level. Right now, gold is trading. Actually, I should have gold on top. Excuse me. Gold should always be on top. Come on, man. Okay. No, I know that can't be right. I know that. Oh, okay, that's an. I was like, dude, I know that can't be right. Okay, so that was like, dude, there's no way that there's only 2 contracts trading on gold right now. Okay. So right now there's 60,000 contracts trading in the micro gold and 35,000 contracts trading in gold right now. So gold has to use price action and always will to be able to move. That's why I prefer gold now. You really can't manipulate gold too much. As long as you kind of trade with the trend and pay attention to structure, I mean, gold is good. Gold is definitely good. Honestly, Cave Trade, I feel like I got in a little bit late. I would have got in if I was paying attention to this. Because like I said, I've already made my money for today. The only other account that I have is that Bull Barbie account. And I've already made $1,000 on it, but I can only trade ES and Nasdaq. It won't allow me to trade gold. If I was able to trade gold, I would be up like 12K in this account right now. I would be up 12K in this account because I would have took that initial trade and I would have took that follow-up trade on gold that I had to take in the sim because I didn't want to blow up my Apex account. But I would be up 12K probably in first place right now. But I can only trade ES and I can only trade the Nasdaq. And I was able to get this small little short on the Nasdaq or on the ES. And good thing I closed it because what I told myself was that, you're kind of doing the same thing. I have an eye to kind of trade against the trend because I've been doing it so long, but I had to tell myself, get out short, get out at VWAP because on the ES will bounce at VWAP without question, without prejudice, it will bounce. So I got out and I was like, if it goes a little bit lower, then I want to go for the long instead of staying in this thing short because initially what I was looking at was that we saw this big move down and I was thinking that the bears were going to retest it. But I had to actually scale out because I don't look at ES on a higher time frame chart. And I just so happened to saw that, oh shit, we made a higher low. So after I seen that we made a higher low, this is actually the pullback trade that I would look for. We got a strong move in one direction and we got a pullback. I would have traded this. And so that's why initially I'm glad I'm glad that I actually zoomed out of this ES chart because I didn't see that it made a higher low. And because it made a higher low, that I know that it's highly likely to continue to go higher. ES doesn't lie like the Nasdaq. You're not going to see a low like this, a push, and then a random drop unless that's what the market's intentions are. When you see a pullback and you see a wick, 9 times out of 10 on the ES you can buy. And the great thing about the ES is that you can have a lot of size on. You can go full port on ES. Not recommending it, but you can definitely go full port on the ES for sure. And have a small stop underneath a prior swing or something like that. Not obviously underneath the swing, but a couple of points right here. Because if this is a true low, it shouldn't go underneath it. And you have so little risk with all this reward. If I was at my desk when this happened, the ES is already up about what, 40 points right now? Almost. It's almost up 40 freaking points. No, I lost both of those PA accounts, Cave Trader. So now I have to build back. I have to earn another PA account. I have to earn another one. And as you can see, I'm just about what, a quarter. Well, like 30 or 40% there. I was hoping that I would be able to trade gold in this Ninja Trader competition. I don't care to trade ES or Nasdaq anymore. I feel like I've now transformed into mostly a gold trader. Oh crap. I'm more of a gold trader now. Ugh. I just like how gold moves. I don't like the manipulation of the indices. I don't like the chop of the indices. I don't like how Trump or whomever can hold up an entire market and it will chop until it gets more information. Gold is moving all freaking day. And I like that about gold. While the NQ and NASDAQ, or the ES and NASDAQ, is chopping it up, gold is out here hard at work. She's hard at work, making moves up and down from open to close. And I like that. I like the fact that she respects market structure. I like the fact that I can actually take the opportunity to look at what's going on the charts and make trading decisions based on what I see and not necessarily what I think. Playing the manipulative mind games that the indices like to play. NASDAQ more than ES. And the mental gymnastics that I have to like, well, shit, if everybody's bullish, then I should be bearish, crap. So yeah, I'm becoming more of a gold trader than trading the indices. Hopefully gold stays this way. Hopefully gold doesn't go back to how it used to trade, just like the ES, just trading in the range all day and not doing nothing. Hopefully it stays like this. Hopefully Trump stays president for, I don't know, forever. So gold can stay, everybody can stay. Well, that's obviously a joke, but um, so gold can stay volatile as it is, because as long as everybody is uncertain, gold will move like this. But once we get certainty, well, I guess we're gonna have to go back to the Nasdaq or ES or whatever. Hopefully gold doesn't change. Hopefully she don't. Hopefully she doesn't. To look at the 15-minute chart. Well, I can look at this chart right here, but I'll look at what you're saying in Discord. All right, so this is the 18-minute chart. But I see what you're saying, though. I see what you're saying. So I'm making this. I can see that gold could potentially come back up here. It can. Hold on, give me a second. Oof. Damn, that's crazy. Hmm. I'm looking at Top Step, the comments right now. Huh. All right, so Trader Golded put this. So he said this is gold is in a somewhat of a wedge, a rising wedge, and the Nasdaq is kind of in the trend. I do think that we're gonna get. I mean, it's high. It's not highly likely. It's almost certain that we're gonna get a breakout. I mean, unless they reject it at that trend line on Nasdaq, it's highly likely that we get a straight breakout out of that range, because we held the pullback. We got a triple bottom here. We got a triple bottom at these lows. I think Nasdaq is going to break through, and then we're going to probably see. We'll probably see maybe one slight rejection at this trend channel. But we also got to remember that we got the September contract that these contracts are going to try to be balanced with. Let's see where these September contracts are. Top Step changed my damn she changed my they changed my they changed my chart without my consent. I was not ready to go to no September contract. And they straight put me in a September contract without my consent, bastards. Okay, so NQ. So yeah, if you're trading the Nasdaq, as I was doing the NA meetings this week, I was thinking, I was like, hold on, how did I make such a stupid mistake like that? I didn't realize that they switched it to the September contract, and I was going back over the price action for the week, and I was like, hold on, I thought I made a mistake this entire week, and I was like, I know I didn't make a mistake that way. Maybe one day, but not the whole entire week. And I was scratching my head, and I realized that, oh shit, they updated it to the September contract, and so now top step traders are trading the September contract. But right now, on the September contract, price is currently at 21,927. So the June contract is only 200 points behind the September contract, the forward contract. So don't be surprised if they close around the same price. I mean, they're going to probably be like a plus or minus, but it's going to probably be around the same price. And with the September contract, we did see that big move down from 2279, 192. And looks like they got the 22.3. I know all-time highs was around like what, 6, like 22.6 or something like that on the Nasdaq. And if we trade above all-time highs, we're definitely going to see a stock run above those highs. That is definitely for sure. We're going to see a stock run above those highs, and it could be a very massive stock run. So if we see that, I wouldn't fight it. And I'm mostly saying that to myself as well. Yeah, so it's 22,672 is the high on TradingView. That's the current high right now. And we're not too far off from that. So okay. All right. This is another area right here. This is the area that I was concerned about, was that value area low. If we can get a break, if we can get the buyers to fail here, and then my targets are going to get hit, we should see a retest of this trend line. We just need the buyers to fail here. We already got kind of another trend going down, forming this triangle right here. So because the bulls failed to push it above it, well, we should see that move down. We should see it, but we'll see. You said Nasdaq bearish? For the bear side, looks can definitely be deceiving. I want to show you the chart that I'm looking. I'm looking at the monthly chart, and I wouldn't short this shit. I wouldn't short Nasdaq at all. I'm gonna show you what I'm looking at right now. And I'm gonna even go to the September contract. Yeah, this is why you don't want to short the Nasdaq right now. We got a bullish pin, a monthly bullish pin, a bullish engulfing taking out the previous candle, and we got this candle opening up around the highs and trading up. That is super bullish. I wouldn't even consider shorting that. Super bullish. So that monthly chart is definitely telling us. I'm not saying that we don't see a pullback, but the overall trend right now is bullish. So I wouldn't want to fight against that. Don't want to be a market donation, a liquidity donation to the market. All right. So it does look like we're going to see the buyers fail here. So this is going to be a buyer's failure if we can kind of get a close. If we don't see a snap back up, and then we're going to see a stop run down. Ugh. The Bulls are going to try to defend themselves here, but they've already failed. They might as well just give that shit up. They might as well give it up. Give it up, Bulls. Give it up. Give it up. Give it up. Give it up. I just need you to fail here. And I'm pretty sure you guys can see it. If you can't see it, I'll show it to you. You got a buyer failure. You got a pullback. And we got the bear selling a retest right here. But it looks like we could possibly see a seller failure here. We don't need this. The sellers need to protect price above that high and obviously above this high right here. The bulls need to fail right here. This is where all their stops are right now. Their stops are below this low. So if the bears can tap into that, then we'll see that buyer failure going down. But it looks like the bulls are coming in at that value area low. So hopefully they don't come in. They don't step up here. It would be nice. We don't see them step up here. Oof. Let's see. Yeah, he's like 16, man. I have 2 years. Yeah. I just had one of those moments. My oldest son is 16 years old. Crazy, man. Well, he's 15. He'll be 16 in 2 months. But 16, 2 more years. And then he's his own responsibility after that. But 2 more years, man. Crazy. Crazy how time flies. All right, so let's see. Looks like we're gonna get that buyer failure. We just need them that stop run. Okay. So he said on a 15-minute? Yeah. Mm. Where do you see the Nasdaq shorting to, Cave Trader? All right, there we go. I mean, at that point, yeah, the bulls just might as well just get this shit up. We've already tapped into them stops. There is no recovery from that. There is no recovery from. There we go. There we go, man. There we go. There's no recovery from this. The bulls are just being stubborn at this point. Well, I mean, I guess we could see a small little bounce here. I'm looking to the left. I forgot. I do see that this small little range. Yeah, we could see a bounce here actually. Who knows? Yeah, we could see it. A small little range right there. And you can see that that's where the market reacted at. I did not take a nap today. So I definitely will be going to Club Bed after this, for sure. I have a feeling that the market's current objective is to get around 450, 448. That's my thesis. I believe the market wants to get around this low right here. Somewhere around this low is where I think the market is trying to get to. So I believe that's where the bulls objective, or not the bulls, the bears objective is to get somewhere around this low. I don't want to be, I want to front run this right here. Front run that little low right there. Probably 53.6. Yeah, right there. All right. That was a good trade. Good gold trade. Like I said, I wish I can trade gold in that Ninja Trader 8 competition because I would be super up right now. I probably won't even have to trade for the rest of the week. That's how up I am right now. Yeah, right now up $8,500 in the account right now, plus the 4,000 that I made on my Apex account. So that'd be like 12, 13. Still taking the normal trades that I would take, plus the profits that I have right now. I'm gonna hit that target. Don't bounce at this range. You said the green line, VWAP at the very least. So about like 650. All right, there we go. All right. We got the first target locked in. All right, we got the first one locked in. I hate that it did that and then turns around and hits my target. But all in all, man, that was a great entry. This is why I love gold. This is why I really enjoy trading gold. No bullshit. You get in if you're trading on the right side of the market, you don't have to worry about none of the bullshit. Beautiful entry on gold here. Beautiful entry. Uh Basically the bears just sold the retest. I sold the buyer failure. This is where the buyers failed to push it above this high. Once they formed that double top right there, it was over. Once that double top was formed, any short would have been viable. And a stop literally maybe even a couple of ticks above this high. Because once you see a double top on gold, it's either they hold it or they don't. There's no random spike above it or nothing, just to sweep liquidity after the double tops in. Usually that's how you know you're on the right side of the market. And so far, man, so good. Beautiful trade. Beautiful trade. I do kind of want to do want to be mindful. Okay. I'm gonna take that. I'm not gonna let this thing bounce against me. I'm not gonna let it bounce. I'm not gonna let it bounce against me. Okay, so I'll take that. All right, so I got 3 contracts left. I'm gonna let it ride. These are just runners. Yeah, I would literally be up $15,000, man, in gold tonight. But all right, so let's look at ES. Let's see if there's any opportunities on ES. I don't see any opportunities on ES. And I don't necessarily see any opportunities on Nasdaq right now. I wouldn't suggest buying the high. I would not suggest that. Looking at Cave Trader's chart, we got a big move down. We got them taking liquidity out underneath this low. So we got liquidity being taken underneath this low. So that tells me that it's highly likely that we see a continuation. It's highly likely that we see it. We could see that pullback. We could see a break of this trend line, but we all know that that first break of that trend line is always going to be a trap. It's always going to be a trap. And if it's not a trap, assume it will be a trap. Because on the Nasdaq, it is a trap 9 times out of 10. It'll go down far enough to get you comfortable, and then it's going to pull back to the trend line where everybody else is waiting to short it at the top of that trend line, and that's going to be your short. I don't think with this triangle wedge right here that it goes higher. And what I mean by going higher is, unless it breaks out, pulls back, and it holds that pullback, that's where you see the continuation. But 9 times out of 10, we got a triangle wedge like this. You got a rising triangle. Usually the floor, it usually breaks through the floor. Usually breaks through the floor right there. But think that we break the trend. The gold is super bearish. I like shorting gold. I love shorting it. I really enjoy shorting gold. Last week Friday, I almost lost my account trying to short that trend. Almost lost it, man. Almost lost that account. trying to short a bullish trend on gold when I know that shit don't work. Gold trades very similar to Bitcoin. If you're a Bitcoin trader, gold is a more liquid option. It trades very similar. You can short gold more often than you buy gold, but once gold starts the trend, it is hard to stop. That is literally a freight train. When gold starts doing this, it's hard to stop. When she starts doing this thing is hard to stop. You're going to have to kind of wait for that pullback to get the confirmation and then trade that pullback. That is very dangerous. This right here, I almost lost my account. If it wasn't for these small little pullbacks, I would have lost the account. If gold did this, where it just trended up, I would have lost the account. But I'm so glad that it pulled back like this a couple of times before finishing the move, because this was like, since the open. So it from 3,400 all the way up to 467. So a 67-point move up, moving gold. That account would have been gone. I think I can delete this. I don't think prices move far away from this one. So I don't think I need that. I don't think so. Yeah, I don't think so. I don't think I need that. And prices moved far away from this trend line. And the market is still respecting this one. It's still respecting that trend line. So I'm going to keep this one. Actually, I'm going to lock this in place for now. And lock that in place so I can keep that just in case. I'm going to keep these trend lines just in case. But if we trade far away from them, then I'll delete these. Okay. All right. All right. So let's see if the bears are going to complete their objective here. This is the small little range that I'm looking for on gold right here. This is the range. Actually, let me look at the Nasdaq. Let me look at that real quick. So Cave Trader just shared a trade idea in the Discord. Okay. Damn, you're looking for a full-fledged reversal, huh? So you're looking for So are you looking for price to go back below and retest that low right there? Are you looking for a retest of that low? Or is that a long? Okay, you're looking for a retest of that low. Okay. All right, okay, yeah. So you're looking to enter at the break of that trend line. I don't know if y'all guys can see that. So this is Cave Trader's trade idea. He's looking for a break of this trend line. He has his stop above that high right there at the top of this trend line, and he's looking for a retest of that low. Let me actually look at NQ real quick on I think a Bookmap. It's been so long. I feel so disconnected to the Nasdaq community. I feel so disconnected. Huh. Yeah, looks like so yeah, I think the reason I wouldn't be surprised if I'm not the only Nasdaq trader that has transitioned to gold, because I do see a lot of Nasdaq traders talk about gold now, and it would explain why the Nasdaq or gold is trading more like the Nasdaq. It would make sense. It definitely makes sense why gold is trading similar to the Nasdaq if Nasdaq traders are transitioning over to gold. Because I know I have. I know I definitely have. And I feel like we make more money on gold anyway than Nasdaq. We make way more money on gold. I was up 4K in the account. I think I got to my desk around like maybe 6:30 or some shit like that. I traded this so this breakdown right here, and this is where I initially got short. I scaled into it up here. It drops in my favor. And then I caught a little piece of this retest right here. I caught a little piece and then got stopped out of my trailer just for it to continue down. And I was like, you know what? I'll just take that. I'll just take that. So this small little range, I was able to get 4K. And a big part of that is because I can trade heavier size with big risk and or not big risk, small risk, big reward. I usually have a 45 tick stop on gold. And depending on my sizing, an initial size, I'll probably lose $1,100 per loss. But I'm usually getting in at areas where price doesn't even go close to the 45 ticks at the most. If I'm getting in short, so uh, with this area, so from this entry at 466 to this high, I didn't have my stop above this high, but I would have put it above this high if need be, and that would have been a 6 point stop. And that's kind of another reason why I had to kind of just wait on gold and stop trying to FOMO into it, because I will say that that was a FOMO trade trying to get into it. I should have just waited for that deeper retracement, but I mean, it is what it is, I guess. But we should see that move down. We should see it. Okay. Mm. All right, Santiago, I appreciate you dropping in, and happy Father's Day to you as well if you're a father. Well, yeah, he did. Yeah, yeah, he is. Yeah, yeah, he just said that. Yeah. You posted your entry? Let's look at that. Okay. So Cave Trader has confirmed he's in it. He's in, well, at least he has his entry right there. So he's waiting for the break of this triangle right here. He's waiting for the break of the triangle, and he has a stop above that high. So this is the triangle that I'm talking about right here. This rising triangle where we have a rising support. We has a rising support trend line with an also a rising resistance trend line. Technically, this would be a channel. However, this channel is forming a triangle. So either we're going to see a break above, a pullback, and a push higher. But in Cave Trader's case, he prefers the breakdown, the pullback, and a retest of that low, the session low. So this is what Cave Trader is hoping for in this trade. So hopefully he gets it. I mean, shit. I don't care what happens to the Nasdaq. I ain't in it. I'm not in it. So hopefully, Cave Trader, you get it. But we up in gold, baby. We up in gold. You know, honestly, Cave Trader, you're absolutely right about that. I mean, the market has been so illiquid lately. Well, I mean, well, obviously, this week we should kind of expect that. But man, the market, I guess since all that US AID money is out of the market is kind of reverting back to its old price action ways. The market was, if anybody started trading this market in the last 2 years, it's this is a similar situation if you started when we was literally in a negative interest rate environment when the market only went up. And we had a replay of that the last 2 years. And now it seems like now we're at the other end of that cycle where all the bulls have been conditioned to be perma bulls that made so much money going long that going short is just out of the question. And the market is still overall bullish. So we're not going to sit here and say that the bears are in control. But you have to pick your bullish entries strategically now versus buying highs and selling it higher. Because that's how the market used to trade. Now you have to wait for them pullbacks and the buy it high and sell it higher bulls. Yeah. So I see a lot of the comments and they all say the same thing. This market sucks. The liquidity sucks. And then if you're an older trader, this is actually normal. What we saw in the last 2 years is abnormal price action. But obviously, if this is all you know, this is abnormal price action when this is actually how the price should action or how it usually actions. So, mm. Yeah, I'm looking at Top Steps Gold channel. I posted a couple of times in it, but man, these guys are super degenerate. And that's not even a derogatory term. They're full porting. Like I'm about to full port. I'm about to full port this position. Yeah, I think so too. Yeah. Yeah, I mean, honestly, just one micro. I feel like so. I definitely recommend trading with micros. I know a lot of people ask, a lot of people has asked, why am I so comfortable holding until target and seeing me be up so much in profit? Trading micros was a big step, or let me rephrase that. Trading micros first. Well, let me rephrase that because that's not entirely true. I traded with minis first and then I kept blowing up. Scalping. My scalps would be, obviously, as an example, I would risk 6 points to make two on heavy size, and I would scalp. And one trade would take out three winning trades. And that was not going to be a viable strategy. But this was back when the prop firms were the wild, wild west. They didn't have none of these consistency rules. They didn't have any of this and that. You had to make, as long as you reached the goal and didn't hit your daily loss limit, it was the wild, wild west. Now these prop firms are, oh, you can only take a max payout of $5,000, or you got to be consistent and blah, 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 blah. But I kept blowing up. When I switched to micros forced me to change my strategy. I had to catch bigger moves to be profitable. And once I made that switch back from micros to minis, in my mind, it's, hey, you should take your profits. And my initial response is no. If I can hold a position in micros to 50, 60, I think we held micros. I think we had our first target was back when I think this was like 2 years. How long ago we been doing this? When it was me and my trading partner every day, I would hold, my first target was at 100 points on micros. And the market showed me every day that if I was patient, I can get 100-point targets, 500-point targets. I believe my target right now, the most points I've gotten in a target is like maybe 500 or 600 points that we got on stream. And so my mindset now is, if I can hold it for 500, 600 points, I'm not going to, just because I'm trading minis doesn't mean anything. I mean, just because I'm trading minis, the market is not going to move. If I'm taking the same entries, if I'm looking for the same setup, all that does is just adds a zero to my P&L. That's all it does. And I'm not going to take profits just because I have minis and I'm up $1,000, $1,500, whatever. If I can hold it with micros, I can hold it with minis. Damn it. And that's what helps me. My psychology, I see the P&L go up, but it didn't hit my target. And if I was in micros, I wouldn't get out now. I mean, if you're in micros, why would you get out right here? Why? You only made 62, what is it, 7, 8? You made about 5 points. You only made like $50, depending on how much micros you're trading. Why would you get out here? You're going to most likely try to trade from supply, and you're going to get out at demand, because the risk wouldn't, the reward wouldn't even be worth your time and the risk if you scalped a small position in micro, or a small target in micros. You're going to go for bigger position, or you're going to go for bigger plays, bigger targets. So I just tell myself, if I can do it in micros, I'm a damn sure do it in minis. So I say all that to say this: Trade micros. Get comfortable with holding positions to target. Get comfortable getting in at supply and trading to demand, and vice versa. And once you get comfortable, when you start adding to your position or you start increasing your size, you've already locked in the mindset that if this was micros, I wouldn't get out here. I would get out here. You just kind of have to be patient for it to hit your target, the same way you would be patient on micros. It's the same thing. Same thing. I mean, risking, yeah. Mm, looking for a 4 hour. Yeah, about 2 hours left in that candle. Looking. Yeah. Gold is definitely. I do think that we'll probably see a bounce in this area, though. Kind of like what you said at this trend line. If we don't see a bounce here at 350, 348 or something like that, if we don't see a bounce there, that would be surprising to me. But it does look like they're trying to find support right here at this low. All we need to see is a buyer failure underneath this low, and we can definitely see a deep retracement. We do have this candle here at 349. That's why I'm kind of looking at this area. This is the last line of defense for bulls right here. This is the last line of defense right here. Last line of defense. You got this range, and you got that low right there. So either gold is going to do one or two things. Either we're going to see a pullback into this area, we're going to see some consolidation and a push and a retest of that trend line, or we're just going to see a nasty stop run. I mean, gold is going to do either one of those things. We're going to see a nasty stop run, or we're going to see a bounce. There's no in between that. Oh, you just got filled? Hold on, give me a second. You just got filled. And I'm out of time for this session. All right, so last thing. Cave Trader is in the short. He's risking $70 to make 500. So he's in. He's in. Hopefully the Nasdaq is not going to be nasty to you tonight. And this is how much. This is your Tradify account, right? Is this your funded account, or is this one of your evals? Regardless, Cave Trader is up 21.9 in this account. So congratulations. Looks like at least your monthly stats, it's only minus 730, 12 days. This is a funded. Yo, congratulations. Yo, congratulations, man. And look at that. He's playing the numbers game. It's interesting how this number shows up a lot. A lot of people say that they're 30% traders, and yet their P&L is positive. Those are the traders that have a defined stop loss, they have defined risk, and they don't allow their emotions to dictate their actions and convinces them to move their stop. They take their losses, they take their lumps because they know that their winners are always going to be bigger than their losers. They do the opposite of what everybody else does. They cut their losers and let their winners run. And that's how you can be a 33% trader and be profitable playing the numbers game. And I'm glad you shared that with us, Cave Trader. That was a great learning example right there. So, yep, stick to the rules, man. That's exactly right. Stick to the rules. Your emotions, your heart does not know what the hell is going on with these charts. Just think about that. I understand that our emotions literally dictate what we do on these charts, but it's your eyes that sees these charts. Your heart can't see this chart. All your heart can do is feel and try to react and try to alleviate itself of pain. That's all it can do. So stick to the charts and not your heart. But all right, guys, I'm out of time for this session. I do expect that we will get these targets hit tonight. At this point on gold, it's trending down. We got a rejection from the highs. We have the bulls failing to break above this trend line, and we had the bulls failing to push it back up as well. So now gold is in this downtrend. Gold is now kind of playing around last week's low or open, or I'm sorry, close. And if they lose this level, we'll definitely wake up tomorrow and we'll see gold trading further. Or we're going to see at least a lower move or a move lower. And maybe when we wake up tomorrow, we might see a recovery. But for right now, I believe that the bear's objective is at least 350 to about 348. Somewhere in this area, we'll see. We're averaging. Are you going long, Trader Cat? Are you shorting this, or are you trying to buy the dip? Yeah, 350 or 348 for sure. Maybe so I think we could see I guess we could see 45 maybe. If we get a stop run to 45, 45 is kind of lined up at this at the bottom of this trend line. This resistance trend line. We could see S1. We could see it. I'm not saying that. Yeah, we could see that. We could see it. But all right, guys, I'm out of time. I'm about to go to club bed. We'll definitely come back tomorrow morning and we'll look for more opportunities to earn some more money. And with that said, peace out, everybody. Have a good night.